Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And in today's video, I wanted to do a quick one to tell you why I decided to sell my DFN position in my main portfolio. So DFN is Dividend 15 Split Corp. It's actually the biggest and most popular split share fund on the Canadian market. It has 15 great companies. Why did I decide to sell it? Why now? What did I do with the proceeds? What did I invest the money in? Did I take a capital gain or capital loss by selling it? And of course, the $1,000,000 question is, should you sell your DFN if you own DFN? Let's get into it right now. All right, everyone, first things first, let's go through the what happened. So first of all, this is my latest portfolio unveil video, which is update 25. And as you could see, first of all, it's important to know that DFN makes up only 3%, or actually made up, past tense now, 3% of my portfolio. You see that there, 3.28% weight. That's the first thing I want to point out to you. It's a secondary smaller position in my portfolio. Number two, did I take a gain or a loss on it? I did take a small loss on it. So you see I have it here at 779 and I sold it at some shares at 709 today. I'm filming this on June the 22nd. So I sold most of them at 709, some of them at 710. So give or take, I did take a capital loss of about $2,230 to be precise. So $2,230. So that's on the 25 grand, right? So you might be wondering, well, Adrian, you're the worst investor in the world because you invested 25K, or you have 25K and you took a $2,230 loss, but that doesn't include all the income that DFN has been giving me. And I actually did this last night. I had to go back because I can't look at just passive, because I only installed passive when I transitioned to Questrade, which was in April of 2022. So I had to go back to all my old portfolio unveil Excel files and go through all the months and calculate how much income I made off DFN, because you can't just say, you invested 25K, you sold at a $2,200 loss. You have to include the income, right? That's obviously a factor. And I'm happy to say I was actually pretty surprised by this, but the total income, the total cash income that DFN has paid me since the beginning, this is like several years now I've had it, is approximately $14,100. So yes, I took a $2,200 loss, but I've made over $14,000 in income. So if you include the income, I'm definitely in a big profit for DFN in the last couple of years. So that it's very important. You need to understand. And this is a good lesson that you'll learn with experience and with time if you're an income investor. I see this often with newer income investors. I bought this like HYLD and I'm down $2,000, $3,000 on it. Yeah, but you gotta include the income. How much income did you get over that period? So even though I took a capital loss on DFN, the income more than makes up for it, right? At 14,000 plus. So now let's get into why I decided to sell it, and then I'll tell you what I did with the proceeds of approximately $23,000. So there's actually many factors on why I decided to sell off DFN, all put together, and that's what made me decide to actually pull the trigger. So the first one, and I would say is pretty much the biggest one, is really the giant premium it's trading at right now. So yes, although right now, as of June 15th, the unit NAV is just over $15, so it is paying right now. I have a strong suspicion that anyway, so this is the June dividend was declared, so it will be paid in July, but I have a strong suspicion because the financials and energy have gone down even more since June 15 that DFN might not pay for August. But either way, that's another factor I'll talk about in a second. First of all, let's stick with the premium. Massive premium that I have a hard time stomaching here. So this is the unit NAV here. So Quadravest, their website is not that great. This is actually the unit NAV of the preferred share. This is the preferred shares and DFN put together, the Class A shares put together. So you got to remove $10. So the net asset value of DFN as of June 15th is about $5.14. And as of today, it's trading at $7 and it's $7.08 right now. So what is the premium percentage? Well, 708 divided by, let's say, 5, what was it? 514 minus 1 times 100. That's how you get the premium or discount percentage. It's almost at a 40% premium, everyone, which means that if you're buying DFN or DFN at $7 now, you're paying 40%, almost 40% more than what it's actually worth. The net asset value is about $5, 514, but you're paying, or you're having it at $7. So I thought this was definitely a big factor, a good time to sell it, because it's trading at such a big premium. So when you sell it, you're getting more than it's worth, right? You're selling it at a big premium as well, which is a good thing. So that's factor number one. Factor number two, I do have, I would consider DFN and DGS the two riskiest split share funds I had in my portfolio. When I mean risk, not the stocks inside, they're very quality, boring stocks, but the risk of not paying. So DGS has not been paying lately. I have a strong suspicion maybe DFN won't pay, and I have a hard time stomaching where I miss out on two split funds not paying over $600. So that was another factor as well. Factor number three is the holding. So if we look at what DFN actually holds, it's actually nothing super special. It holds 15 top quality dividend companies. This is actually the latest holdings update as of May 31st. Very easy to find, by the way. You just click on news and updates, click on fund update, and you'll get this. So you see the top companies here. There's about 15 companies, and it's Royal Bank of Canada. There's TC Energy, BCE, mostly financials, right? You got the banks, the life insurance companies. It's mostly those. And you have some pipelines like TC Energy and Enbridge, some utilities and telecom like Bell, Telus, a little bit of TransAlta and Emera. So, this is all companies that I've owned already with other funds. So there's a lot of overlap, and I'm always looking for ways to streamline my portfolio. So that's another reason it's the holdings. And now let's compare them to DGS. So DGS is pretty much the competitor of DFN. It's a generalized, top Canadian companies on the market. So another factor, I have both DGS and DFN, but I'm starting to like DGS a bit better. Honestly. So that's another reason. Another quick reason, this is very small, but it's still something, the management fee. So DFN's management fee is 65 basis points, 0.65, whereas DGS is 0.6. So it's 5 basis points lower. And speaking of the holdings of DGS are much more interesting. So whereas DFN, it's really 15 of the banks and life insurance, and there's not much interesting stuff there. DGS is much more interesting. There's a lot more companies and there's a lot more variety. So first of all, you see the biggest position is their global dividend growth covered call ETF. So you got a little bit of global diversification, but check out the variety. It's not just the financials mostly. It's other stuff. You got Dollarama, you got restaurant brands, you got Canadian Pacific Railway. Of course, you have some energy companies like oil producers like Canadian Natural, Imperial, and you'll find the banks and insurance companies as well. But there's a lot more variety. Here's Loblaws, Waste Connections, the other railroad, Alimentation Couche-Tard, Brookfield, ARC, and this is just 89% of the portfolio. So there's actually more than 25 companies. So the holdings much more interesting with DGS. Management fee with DGS is about a lot lower. The premium percentage on DGS is a lot lower. So you see here the price, and today, I'm spoiling it a bit, but I actually bought some DGS with the proceeds, but I got some under $5, and the NAV is $4.73. So the premium is under 10% for DGS, whereas DFN, it's almost 40%. So that's another reason for sure as well. Just sticking with DGS versus DFN, another interesting thing I looked at, if you look at the chart between DFN and DGS during the period after the COVID recovery, you see something very interesting. So right here, this is pre-COVID. You see it's about 860, 870, 880. But after the COVID recovery in 2021, DFN kind of had trouble getting back to the same point it was pre-COVID. Right, you see that here, it kind of had trouble getting to those levels. It almost got there, 840, 860, but it didn't really get back to 880 870. But if you look at DGS, something very interesting. Not only did it get back to pre-COVID levels, but it's completely smashed it and get much higher than pre. This is COVID here, bang, you see it. It got much higher. So is DGS maybe a bit better managed? It's possible. This from the chart, it looks like it. In terms of the after COVID recovery, we know that Brompton is less aggressive with their covered calls, so that's probably a factor. Another factor is that I have a good relationship with Brompton. I'm being completely honest. I know them. I've spoken to them, both the ETF manager and the closed-end fund manager, whereas Quadravest, they haven't even responded to me at all about doing an interview, doing a Q&A. So I don't know, there's something weird about them. I have no idea. So they haven't reached back out to me. This is a very small, minor, stupid thing, but all these things are kind of adding up here. This is why I said there's multiple reasons. So, so the $1 million question now is, what did I do with the proceeds? So obviously, that I bought some DGS, but what else did I buy? Well, here's what I bought. I bought 10K in FTN, which is a Quadravest product. It's actually the last Quadravest product that I have now. 5K in DGS for obvious reasons. So FTN and DGS, by the way, besides my crypto positions, these were the two positions, FTN and DGS, that I was the lowest on. So these are great to average down because I'm at a big capital loss for both of them. So I said, you know what, let me average these positions down. So that's what I did. FTN, very interesting right now. It makes sense because a lot of the stuff in DFN is already in FTN. So in case you didn't know, FTN is just financials, mostly Canadian financials, but also US financials as well, which are suffering. So I thought is a really good time. Here you have the top holdings of FTN here. You could see big percentage in US banks, about 36%, but 43% in the Canadian banks and life insurance. A lot of the same stuff, plus the US banks, which are suffering. So I wanted to buy some more of those anyways. Also, FTN premium is definitely not as high. And there's a lot of leeway with the $15 unit NAV. So I think FTN, at 17, maybe it's a bit lower now at 16. I think it has a much, much lower chance of missing a payment compared to DFN, which is right there at the $15 range. So that's another reason why I decided to put 10K in FTN. And if you look at if we do the premium here, let's see what FTN is at right now. So FTN right now is about 886. And you see here it's worth about 715. So if you do 886, let's just calculate the premium here, divided by 715 minus 1 times 100, 23% premium. So yes, it is at a pretty sizable premium, but definitely nowhere near 30%, 37% like DFN. So I put 10K in FTN, I put 5K in DGS for the reasons I explained earlier. The unit NAV, the NAV is 473, and I picked some up. This is of course as of June the 15th. I'm assuming it's a bit lower than that, but I picked some up under $5, which is an absolute steal for DGS. Yes, I know I could be missing dividends for quite a few months, but hey, at least I only have DGS. I don't have DFN anymore. So if I miss, I only miss with DGS, and I of course average down DGS as well, and the rest should be pretty self-explanatory. ENCC is, I put 6,000 in that, so a sizable chunk in that. This is the Horizons Canadian Oil and Gas Equity ETF. So remember, in DFN, you had Enbridge and TC Energy. Well, this one has Enbridge and TC Energy, along with 8 other big oil and gas and pipeline companies. And ENCC, as of today, actually crossed the 15% dividend yield range, which was pretty incredible. So I put 6K in ENCC and a little 2K, the rest in call, which is the Evolve US Banks Enhanced Yield. So this is just US banks, over 14% yield here. So, I did want to, so I feel like this move lowered my risk overall of missing dividends, because I did put a lot in FTN. Yes, some in DGS where I could probably miss dividend, but at least, I only have DGS now instead of DGS and DFN. And then the rest went in regular covered call ETFs that don't have the same structure as split share funds that will never miss dividends. Although I could suspect maybe that call or ENCC might lower their dividend, but I'm not really sure. Volatility is high on energy and US banks right now, so I don't think they'll have a problem to cover the dividend, but we'll see. So if you're asking yourself, what about me? Should I sell DFN? Well, listen, I think DFN is still a good split fund to hold long term. It's quality companies. It really depends on your book price. You got to look at your book price and think about it. That's the advice I could give you. Just because I make a move to streamline and sell something doesn't mean you have to. And in case you missed it, I did make a video with all these great leverage covered call ETFs out. Should you just get rid of all your split share funds? I actually made a video about it. Should you sell, swap split share funds for leverage covered call ETFs? 5 factors to consider. So if you're thinking about making a similar move, I would check out that video, and I discuss 5 factors you could consider to try to make you, to help you decide. So that's it for this video, guys. If you have any questions, let me know in the comment section below. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.